At some point, we've all come across a sine wave. Whether it came from a high school math class, graphics work, or industry, it's a very helpful tool, and especially so since it can help us find profitable trades when translated into something for our world. This handsome devil is none other than Patrick Lafferty, principal at CTG Trading Group. He developed this indicator back in 1999, and the indicator we're using was coded in 2016. Our weekly indicator goes by the name SineWMA, or simply SWMA, and is short for Sine Weighted Moving Average, if you're wondering. This one is also a price overlay, single line, baseline indicator. This is a pretty slick baseline because the math puts more weight on the middle data rather than either end, which is a departure from most trending indicators. Looking at the signals this indicator prints, you can see that it sidesteps some of the usual suggested entry points near congestion. And it does seem to encompass more of the move, which is a wonderful thing. Of course, there are a few mixed signals, but that's going to happen, and that's okay. Without dragging this on much further and risking soggy cereal, let's get this party started. We'll pick it up here with this nice fresh long signal as price crossed over the signal line. That was a great run up. Notice how the signal line encased the entire move up by giving it some room to breathe. Since we don't necessarily use baselines as exits, we'll just be calling each entry signal. Alright, that would have kicked back at least the first half of your trade and profit. The second half of your trade probably would have closed out at break even. Now the new long signal. That would have brought in another first half profit before price reversed. Remember, half is always better than none. That was a great run down. Not much excitement, which we love, and profits on both halves. That's what fattens up the account for sure. Alrighty, we had a legit long trade there, bringing in profits then a couple of mixed signals. I suspect that most algos would have kept you out of the long signal due to its short-term nature. Let's see what this short does. We've seen a couple of these already. Not long trendy moves, but enough to get us into at least one of two profitable half trades. This is where having this system keeps your risk known and capitalizes on the gains. And we've got another flippity-flop of signals. First the long and then the short. So you'd not have been in a long trade due to its short in nature, so it's off to the short we go. We would have had another front-end profit before price reversed into that sideways mess with multiple crossings. After you bounced out of the second half of your trade, you'd most likely be on the sidelines with this pair while looking at others for better setups. And finally, a decent run for healthy profits on both halves of your trades. So, while a baseline is just that, this one looked pretty good at first blush, even when the market wasn't that great. And considering that it provides you with a foundational algorithm signal, it's definitely worth exploring. Take some time to noodle around with it and see how it does in your system. We've got it in the Stonehill Forex library, so go get it and make it yours. The link is in the video's description. It's a pretty clear sign. We're not going to offer you financial advice, even if you say pretty please. You don't need it, and we've got the goods to help you on your way. Check them out on the site. Our only goal is to help you become a better trader.